So, Sunday, January 28th, and another tool that I use, it's a free tool that I wanted to bring to your attention, is a website called Simply Wall Street. And here, if we click on the email this week from Simply Wall Street, what you're able to do, or what I would suggest that you do, is enter the ticker symbols of the stocks that you're actively buying and selling. Don't enter your whole portfolio like you've been doing in Yahoo Finance and tracking those on a regular basis, but put in only the stocks that you have money in. And then every week you'll get a weekly report and it'll give you a summary of what's gone on in some of your positions. So here we're getting, well, it's week 4, so fourth week of January. So it starts, first week would be first week of January. So it's on a calendar basis. So week 4, trading week 4, VLO is up 7.6% this week and the market is up 1.2%. So obviously Valero VLO had a great week and I thought we'd spend a minute to go over some of the things that we saw in Valero, particularly on Friday after they had announced positive earnings that beat expectations. So to do that, we'll flip back to Yahoo Finance and we'll go down to Valero. And here you can see the Friday one-day chart closed up close to 138, didn't hit 138, but it got very close to 138. But during the day, it got as low as 134. So that's a $3 swing in this position. And if you drill into this further, what you'll notice is it opened slightly higher than it closed at on the previous Thursday, but then it dropped down below or close to below what it closed at in the previous day on the Thursday. And if you had have been in a position to acquire some additional shares, you would have had a great entry point there just around 10 o'clock as it started to climb up towards this first peak, which peaked out at just above $137. So the way that I played this on Friday was I waited to see what it was going to do as it opened. And around 10 o'clock, when I started to see it spike up, probably around 10:15-ish, I made a trade and got out of it in that range of 136.45. But I didn't sell all of my shares. I sold a third of the shares, and I waited a little longer to see if this would continue to go up. And as it did, I actually bought a little bit more in the position and then sold both of those positions. So again, back down to holding only 2/3 because I went back up to 3/3. Sold both of those up around here and then sold the remainder just below the peak. I didn't time it properly. I didn't get out. In fact, I didn't sell it in the 137 range. I was in the 136 range for my last tranche of shares. But my point here is, well, a couple points. First, it's almost impossible to time the peak and the bottom. So I'm never trying to do that. But you can take small incremental profits as you see it going up in case it does take a downturn and go down, and then wait on it to see what actually happens. And fortunately, what happened was what I was hoping would happen, and that is it took a downturn. Now, again, I didn't time this 100% perfect, but still made money at the end of the day. And I made money twice this day because of how I played this. So on the way down, probably back in the 135, close to 136 range, I thought, okay, it's probably bottomed in around here. So I bought a third of my position back. And then I was hoping it was going to correct and go even higher, but what happened was it continued to go lower. So as it got lower and close to 135, I bought back in to a second third of the position and hoping again that it was going to go higher, but it didn't. It went lower. And so I bought more in around this area. And then I held on to that position and I waited as it continued to go down. And I was really close to buying and doubling my position. So going effectively all in, double the position here, thinking that this thing had to go up. Crude at the same time, if we look at what crude was doing, it was kind of following the crude, the plan for crude. Unfortunately, it doesn't have the 1 day here, which I would have loved to show you. But basically, crude went up on Friday, and then it took a dip, and then it recovered and went up again. So you can see here on the far right, it opened, it went up, and then it came down, and then it spiked back up again. And this is kind of the same trend that all of the oil stocks followed. You can see that in all of the charts, up and then down and then back up for the most part. I mean, little, not identical to all of them, but if we look at Valero again, I then held it and I held it and held it and held it until it climbed up and then exited in the 137 range, thinking that I would hold it to see whether it got back into the 137.25 range. Because if it had hit that peak earlier and crude was doing well as it was when it hit this peak, it was very likely it was going to break through that 137.25 range and go a little bit higher. Now, I didn't time it, again, perfectly. I didn't get out at 137.87, but I got out somewhere in the 137.50 range and was able to do a double take on that and make a couple of percentage points of profit throughout the day just in those trades alone. So those are the types of things to look at. The other thing that was helping this was the volume. So interesting here, you'll notice the third line down, volume 5.29 million on the right here. The volume was almost double its average volume of 3 million. So when you see a great deal of volume and factors like the price of crude going up, other oil stocks going up, and Valero having positive results and going up, that was a perfect indicator to get back in and increase your position and hold out for some gains and then get out towards the end of the day. Now, with Valero, it's going ex-dividend this week. So tomorrow is January 29th, and what you'll notice here is that it goes ex-dividend on January 31st. So on the Tuesday, we're probably going to see a decline of $1 or more in Valero because it typically goes down the same amount of dividend that is going to be paid out when it goes ex-dividend, but then it usually pops back the following day. So you can buy it when it dips, or you can buy it after it dips, and so you can buy it as it's dipping to get the dividend and hold it, or you can wait until the dip finishes and it starts to go back up and buy in again. And you may miss the dividend in that case, but you'll get the capital appreciation.